So we understand that placing an order itself is a skill, and when it kind of comes to the markets, as far as trading is concerned, your timing is more or less really important. Now we are going to have a look at some factors that you could actually look into before selecting or identifying what kind of a trading style is going to suit you the best.
So when we talk about the different kinds of trading styles present in the markets, we can majorly classify them into four parts. So first we have the scalp trades, then we have the intraday, swing, and followed by the positional. As far as scalp trading is concerned, you'll be looking out for very sharp and very quick entries and exits. And your probable average trade duration could be a couple of seconds ranging to a couple of minutes. So there could be even situations where you're going to enter and come out of the trade within a fraction of seconds, maybe 5 seconds or 10 seconds or 15 seconds. So it could be that quick. Now, scalp trading is actually preferred by people who have a lot of time to sit in front of the charts, and they can constantly track the charts from time to time, looking out for appropriate entries and exits. So, as far as a trader is concerned, getting into scalp trading in the initial phases is going to be extremely difficult. Why? Because a control over your emotions is going to be the most important factor as far as scalp trading is concerned, rather than your setup or the logics that you're going to use. A control over emotions is going to be much more tougher for you to achieve during your initial days. So, I'll just quickly show you what a quick scalp trade could be. So today is the 20th of October, and right now I have on my left hand side the charts of Bank Nifty. So today has been really bearish as far as the banks have been concerned, and Bank Nifty too has been extremely bearish. So you can see that after opening, it has been continuously sliding down. So I'm personally not a person who is into scalp trading. However, I just wanted to just quickly mention, okay, some sort of a logic what scalp trades could be. So this was the day's low. So at 11 o'clock, 40,000 marks has been the day's low at that particular point of time. Okay, 40,000 marks or 40,050 marks is the day's low. Now, if somebody is actually checking out for scalping, so he either scalps using at the money options or slightly in the money options, or maybe deep in the money. There are people who scalp using more in the money or deep ATM options also, but majority of the people whom I know are into scalp trades. They trade at ATMs or slightly in the money options. Okay, from my particular circle. So let's take an example with 40,000 PE. Okay, so for the day, the high value that has been formed by the 40,000 PE was around 185, 187 levels that you see on the right hand side chart. Now, uh, first time the low of the day was formed at 40,014 up to 11, 40,040 levels were the day's low. Now let's say that towards the end of the day, that is at around 151, once again this lower level is actually getting reached. Now someone who is actually checking out for a scalping opportunity, there is this kind of setup where when Bank Nifty is actually breaking the day's low once again, somebody thinks about entering the ATM put. Okay, so they would be going long on an ATM put, expecting the options premium to easily spike till the day's low. So why? Because especially on Thursdays, because of the rapid rate of theta decay happening. Okay, and these kind of cases where once again that particular day's low is actually getting broken, we can easily anticipate some sort of a 20-30 point move when the day's low is getting broken, and if possible the price, the options premium, would actually try to achieve the high value of the premium of that particular day. So for example, on this particular day, 40,000 p, the high value till 11 o'clock was 186. Then Bank Nifty also picked up, so the options premium also dropped. Now the next time Bank Nifty actually breaks the day's low, somebody who is actually into scalp trading, he may consider buying the 40,000 put option, expecting the options premium to easily shoot up towards the day's high. Okay, if some sort of a further drop is happening. So once again, this drop or this rise in premium is completely dependent on the delta gamma factors and all. So you're not getting much into that as of now. So, in simple words, scalp trades would be one where you would be entering and exiting within a fraction of seconds or maybe a couple of minutes. and you probably would be trading in higher size. You'll be taking n number of trades per day. Maybe you're going to check out to capture like 20 to 30 points per trade, or even 10 or 15 points per trade. It doesn't matter, because you're going to take n number of trades. So whenever there is an opportunity, you think about adding positions again and again. That is, you'll take multiple trades during a day. So that's all about scalp trading. So you'll be focusing on taking more quantities, and you'll be taking multiple trades over the day. And this actually requires a good emotional control, and it would also be a bit time consuming. Why? Because you had to track out for opportunities, and you should be very fast also with your trades. Okay, so this is what we refer to as the scalp trading style. So as I mentioned to you, it would suit more for individuals who are having a lot of time to spend in front of the screens. Now here I have actually given you an example where you could actually scalp in Bank Nifty. So you could scalp in Nifty. You could actually trade. You could actually scalp trade in options. Even you could actually do scalping in equity also. Okay, where you're looking out for small movements whenever a breakout is happening. So for example, if there is a breakdown happening, so you check out for some quick entries and quick exits coming out pretty fast, because even if the breakout is to fail or the breakdown is to fail, initially we see some sort of a momentum that is going to exist with the level being pierced. So those kind of opportunities, look out to capitalize. So there is nothing like you're going to scalp only on options. You could be directly be scalping on the spot too. Okay, so that is what I just want to mention. You can directly scalp on stocks also. Okay, so I hope you get an understanding of what scalping is. Now let's move on to the other steps. Now, let's move forward to intraday trading. So, as majority of you knowing, so intraday trading is the particular style where you look forward to buy shares and sell shares within the same day. So, we know that market opens at 9:15 a.m. and closes at 3:30 p.m. However, most brokers permit intraday trading up to 3:19 p.m. That is, you buy something in the morning, and before the market closes the very same day, you sell it. So it could be the other way around. You short sell something in the morning and you buy it back before the market closes the very same day. So the trade duration could be lasting from a couple of minutes to maybe a couple of hours too. So the only factor is that you have to buy and sell within the very same day. So now I'll just quickly show you an example of an intraday trade. Now let's talk about an example where you are actually having a bearish view on Bank Nifty. So you feel that okay, if the opening range breaks up, so opening range meaning the first 15. So let's talk about the first 15-minute low. Okay, so let's assume that you have a feeling that if the first 15-minute low is actually getting broken in the next 15 minutes, that means you have a bearish outlook on index, expecting the market to fall down further. So today, this is the chart. Once again, today is the 20th of October, and you feel if Bank Nifty is to break the first 15-minute low, within the next 15 minutes, you are going to go for a sell or a short sell position the Bank Nifty futures as soon as the day's low is actually getting taken out. So you have a bearish view, expecting the markets to, let's say, go down by 300 points or 200 points. So you go for a sell position on the Bank Nifty October future. So that is the present expiry. So you go a short position on the Bank Nifty October future with a bearish view. So your logic over here is to get in the trade and come out of the trade as soon as your target is achieved, or as long as you feel the your view is still the same, you stick on to the trade. Now, one particular aspect to be looked at in this case is the only thing is you'll come in or you'll get in and come out of the particular trade the very same day. You really won't be taking the trade overnight. You'll just stick with the trade only for a single trade. And as soon as the day ends, or before the day ends, or as long as your view no longer stays the same, you come out of the trade. So you come out of the trade maybe using a stop loss, or maybe you kind of keep a hedge to just limit your downside. Okay, so there are multiple ways. So intraday trading, in simple words, is a kind of style where you enter and exit the trade within the same day. So if you have a bullish outlook, you go for a long position. If you have a bearish outlook, you go for a short position. But before the market closes that particular day, you make sure that you come out of the positions whether you're in profit or in loss. Now, the next kind of trading style that we are going to speak upon is regarding the swing trades. So, the difference that happens over here is, so intraday trading, you stick with the trade only for a particular day. So, whether your view is right or wrong, you come out of the trade that particular day itself. However, on the other hand side, as far as swing trading is concerned, your trade duration could be lasting from a couple of days to even a couple of weeks. So here too, you would be actually buying something and sticking onto it as long as your view once again stays the same or your view is once again valid. So as long as you feel that okay, the momentum is going to continue, or as long as you feel okay, this trade is actually in favor of your direction, just moving up per your view, you'll just stick onto it. So maybe you start with the trade expecting a 4% move. However, if you feel okay, the momentum is still strong, you can actually carry forward it maybe for the next 2 to 3 days or maybe for the next 1 or 2 weeks. So the difference is you take the position overnight with a view that it is actually going to achieve your targets. Now let's have a look at some recent swings that we personally took. So we are into swing positions in equities. So as far as intraday is concerned, we really don't take any sort of equity intraday positions. Rather, it is an index and commodity crude oil that we do intraday. So now let's see some of the recent swing positions that we have taken, and let's just try to interpret what swing trading means. So Kotak Bank has been one of the swings we had recently taken. So as you can see, after reaching an all-time high, Kotak has been kind of consolidating around 5% from its 52-week high over here. So we personally initiated some long positions on Kotak as soon as this particular resistance level got taken out. So we anticipated the price to move towards the next significant level, that is at the 2000 marks. So we bought it over here with our stop loss somewhere over here, and we took out an exit at around the 2010 marks partially, and we were eventually able to hold on to the trade towards the 2050 levels also. So we cut some at 2050 and we had cut some at 2010. So this particular trade, we were into the position for a couple of weeks. This is we were into this particular trade for like 3 weeks to 5 weeks, where we did partial exits. So these kind of positions where you buy something and you carry it forward for a couple of days to a couple of weeks is what we refer to as a swing position. Now let's move ahead and understand for ourselves what we mean by positional trades, which is once again similar to swings, but it is majorly the time difference that plays in. Now, speaking about positional trades, here it is more or less, as mentioned earlier, similar to swing. However, the duration that you're going to hold on to the position is going to be ranging from a couple of days or a couple of weeks, and usually it could even extend to a couple of months and a couple of years too. So majority of the time to take a positional trade, there could be some technical aspects that you could be looking into. And alongside with those technical aspects, there could be some fundamental reasoning also. For example, we have recently taken up a positional trade based upon the technicals as well as the fundamentals. So these are usually done in fundamentally strong companies as far as we are personally concerned. And we really don't mind holding these companies for a fraction, for a couple of months to a couple of years even. So these would be a part of our portfolio too. So in fact, so by standard definition, trading is anything lesser than 1 year, as written in many places. However, trading is not something pretty much theoretical. So we personally consider positional trades to be a mixture of both technical analysis, where we are taking trades in fundamentally strong companies, where we have the cushion of holding it for a larger duration of time, as long as we feel okay fine, this is actually one with a good momentum, it has a chance to keep up the momentum too. So let's quickly have a look at one of the positions we have taken recently and what were the rationals behind it. As all of us know, ITC is like one particular company that has been consolidating in the 200 range for a very long duration of time. So, very long in the sense, a matter of years. So, this one particular stock actually catches our attraction, considering the fact that this is one particular defensive stock that we took out to diversify our portfolio, because like our exposure has been majorly in banks and other aggressive stocks during this particular last 1 year from 2020 to 21. So now we thought, okay, what, why don't we kind of actually just diversify our risk into some defensive stocks on the FMCG and the healthcare domain by booking out the profits. So we initiated long side positions on ITC once the price actually came out of this particular trend line. So in fact, within a couple of days itself, the trade was up around 17 percentage. However, right now, once again, the price has actually dropped down, and now we are sitting at a gain of around 4 to 5 percentage. Now, if you're kind of actually asking me, so why didn't we actually book out the profits at the 17 percentage gains? The answer is pretty simple. We expected more out of ITC, so that is the reason we stuck with it, or we kind of actually just didn't come out of the positions, and we're still holding on to it also. So here we are thinking about having ITC as part of our positional systems, where we are having or keeping aside some exposure into a set of defensive stocks that could more or less not be too much affected if some sort of a big correction is to come into. That is our expectation. So none of us can predict the market. So let's hope for the best.